The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 24th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. You can send me an email, steve@tfnn.com. Of course, in the Tiger's Den, any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow trading up 116 points, trading out 19,916. S&P is up 0.6%. That's 13 points even, Steven, trading out at 2278. NDX 100 up 21 points. NASDAQ Composite up 32, about 0.6%. Russell 2000, the leader in the clubhouse, up 1.3%. That's 18 points to the upside. Semiconductors, actually, the semis are leading the charge here. $15 is what it is trading at to the upside. Not trading at, it's trading at 938.85. So green arrows all over the place. Goldilocks back $4 right now. Really not too bad in consideration of the strength that we are seeing, or the weakness that we are seeing inside of the Japanese yen or yen futures out there. Nonetheless, leading the charge here to the upside. Coherent Software. I don't know, maybe it's not software. Coherent Inc., that's up $7, nearly 5%. Broadcom up 7. Chipotle up $7. So we got sevens. We got 3 sevens. That means ring the register out there. Now, the market is, just so we clear the air here, not that the air wasn't clear, but the market right now is running on, as I said in the den, solar power. And I do mean solar power because the QQQ series ETF up 54 pennies. Volume thus far, as we speak at 1 o'clock in the afternoon, 6.8 million shares. That is the equivalent on a straight line basis, I believe, of, and I can't believe it, my math must be wrong, 12 million shares for the day. 12 million shares for the day. Hey, markets, solar power, you don't need to see all that other juice out there. Russell 2000, about 15 million shares. That's the equivalent of about 27 million. The SPYs, 31 so far. That's about 57 million for the day. We'll see where it ends up. But basically, the markets are moving higher with light volume, just simply powered by solar energy. I don't know if you look outside my window, you see plenty of sunshine out there. So they can move higher. Now, yesterday, let's pick up with regard to where we left off yesterday, right? We said there was probably one chart, even though the markets are powered by solar power, I'm not. I need water to power me. The chart we were looking at yesterday that you thought, that I thought, was probably the single most important chart was this one. Was it not, right? We took a look at the descending price channel inside of the Dow equity futures, the clearest channel that was out there. We know that the Dow had been basically relatively weak out here, and we said there was the possibility that there was an A to B equals CD pattern that was forming. Because what you and I noticed was that the retracement that had taken place yesterday from the low out here at about 2 o'clock in the afternoon on January 19th to the high out here at about 9:30 on January 20th, there was a a beautiful 0.618 retracement. So we said, we have a series of lower highs and lower lows. But this one here from yesterday was one that was making us say, something to think about. Now, at about, what time was it? 10:30, 10 o'clock, 10:30 was when we saw this area give. Not only did we see a 30-minute profile. I'll try to blow this up just a tad out here. A 30-minute profile that was truly in a bearish mode. Now, a bearish bias, not mode. Now, the reason we say that is because that top of the box, that red line, closer to the point of control, that little light blue line out there, versus the green line at the bottom. So you had two levels of resistance that were taken out. Now, with regard to the A to B equals C, this is going to be interesting out here because it could be on a 30-minute basis or any time frame basis. Not any time frame, but it could be a Gartley sell pattern that is forming. This I don't know. So it's really going to be the next retracement, whenever that occurs, if that occurs, that'll really tell us the picture. Now, we gave a price target, right, of that lightning bolt. Was very simple. It was 19,838. We said you break through this descending price channel. Now, as soon as that occurred, by the way, yesterday we took a stab at the short side. Subscribers and I did, inside the ES Mini. All looked okay, even with a little give back yesterday afternoon. But what we said was, what we did, the action we took, we weren't like a deer looking into a pair of headlights out there. As soon as this broke, it was sayonara, adios, see you later, basically close to a break-even type trade out there. Said, we don't want to have anything to do with this. Now, the next most important pattern that is out here with regard to the Dow, let's do this here. Let's go ahead and, I'll leave the descending price channel on. And now let's go take a look at from the time period of January 6th out here. Let's go from that high all the way down to the low of a couple of days ago out here. And now what we're going to see is we have a 0.786 Gartley, potential Gartley sell pattern. And I do mean potential. Because in order for this to actually turn into, you see, some people might have said, hey, I'm going to sell the 0.618 retracement. No. You do not want to do that. Why? Because you want the cavalry to come in. But we were looking at hammer candles yesterday, right? They give us the signals as far as what the market wants to do. The same thing occurs up at tops. You look for some type of bearish reversal signal, and you look for it to complete right around where a pattern is completing out here. So let's put that A to B equals CD back up on our screen. That actually never took it off, but my screen decided to take it off because somebody wanted to see me redraw that out there. So we're at the 1-to-1. We're right at the 0.786 retracement. If we do get a bearish reversal signal in the next 30 minutes, 45 minutes, 2 hours, whenever it might be, okay, then what we want to pay attention to is what happens to the next retracement. Does that retracement come back and take out this 19,666 level? Or is it just really retracement of the A to B equals CD pattern out here? Do we set up, does the Dow equity futures contract set up the next series of higher highs and higher lows? Now, I don't know the answer to that question out here. If I did, I would give it to you. I just know we need to look for that next signal, that next piece of information. We already got this piece of information. And by the way, it's clear, it's unequivocal, it's a 30-minute time frame, but we knew that the change in trend would occur on the shorter time frame first. So where are the Dow futures eventually headed to? It really depends on the S&P, whether it can get its act together to take out the level of 2277. That's the next key number. Steve Rhodes with TFNN. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we mentioned that the next level that we want to be paying attention to, the 30-minute chart inside the Dow Equity Futures contract. Look for some type of reversal signal. That's going to suggest some type of retracement is in play. And then we just need to see where that retracement takes price to. Inside of the ES Mini out here, it's trading right now into its TAS weekly profile high. Of course, the week doesn't end until Friday. It's an interesting figure, 2273. We're trading just above it right now, 2 ticks above it. But the real number out here is going to be the daily profile at 2277. Now, just as we looked at on that 30-minute chart, I'm going to go ahead and turn price off. I'm also going to go ahead and turn off the weekly profile levels out here. And that's going to go ahead and leave us with the current daily profile. Now, notice how that point of control, little dash blue line, closer to the top of the box out here. That says that where the snipers are, where Humpty Dumpty is up at that 2277 level. Now, we know without a doubt that the market is moving up on solar power. But solar power is enough to go ahead and heat homes and air-conditioned homes and turn on the refrigerator out here. So you can't ignore solar power out here. If, in fact, the ES Mini is able to close above, trade above 2277. Doesn't have to be today. Watch it overnight. Whenever that happens, boy, that is going to tell us that the next leg to the upside is underway. So we're up, or it's up against a level, or getting close to a level of resistance. We'll see if it holds right now. If we were just going to use volume analytics, we would say that it should hold out here, but there's more to a market than just that. There is something called momentum, and the momentum at this stage here is to the upside, not to the downside. If we take a look at market breadth out here, in fact, we should do that. Well, let's take a look at this. Let's just take a look at our daily advanced decline indicator inside the New York Stock Exchange, now above zero, firmly above zero. That says that the market is back in the hands of the bulls. The NASDAQ composite still negative, yet we are making a new high out here, right? Yeah, we've taken out, it's taken out, not we, but it's taken out the high from January 13th. We'll go switch over and take a look at the indices here, some of Stevie's charts there to see what we've got. The Dow now above the, both above a shorter-term trend line, also the oscillator above zero. That is bullish. Everything is coming up roses Ramblin' Roses, as a matter of fact, out here. So it looks really good. Is there concern? Yeah, there's always jitters. The biggest jitter out here really comes from a couple of days ago. That's we've got a caller out here. Sorry about that. Robert, did not see you, but thanks for calling. Thanks for holding. How are you today?
Oh, very good, Steve. Thanks for taking my call.
Sure, my pleasure. And you want to take a look at OMC Omnicom Group. So tell us what you're doing, how we can help.
I was curious what your view was on.
Are you in the equity, looking to get in? Tell me what you're doing.
Yeah, I was thinking it reports in February, and I guess my view is that I might buy it.
Okay, so if you're going to buy it, let's give you the kind of the risk-reward scenario out here. This is for trade, investment. What's trade? Trade. Okay. Yeah. So the trading. The trading scenario was the following. Your entry price was about 84.27. You're trading at 85.90 right now. That would mean your stop would need to be below 84.27, and your target on this is going to be the 87.29 to the 89.66 range out here. That's what the trade setup actually looks like. So you'd have to do the risk reward on your side to determine whether or not it was worth it for you to go ahead and take that trade out here. Or maybe you try to scale into it. But and where I'm going with that is taking a look at just simply our TAS daily profiles out here, which the bottom of the daily level, that 84.27 held as support, that little dash blue line close to the bottom of the box. So this pricing area out here should be explored fully to the upside, which would be the 88 to 79 area out here. What I'll also say is today it is trading above its oscillator unchanged line out here. As I put this is OMC, so that's and the price oscillator itself, the bottom panel, is above zero, so it's trading above the oscillator unchanged line. That means that this price oscillator at the bottom is rising, and it's rising above zero. There's nothing more bullish than a rising price oscillator above zero. I mean, there are, but I like to use that expression out here, that it is bullish. So it looks to me like this will go back and explore that 88.79 area, and you just need to go ahead and make the case as to whether whether at this stage of the game it's worth the reward risk for you. Does that help?
It's very good. Thanks, Steve. Can I ask you about another one?
Yeah, you can. You've got the floor.
Yeah, so Procter came out, I think it was last Friday, and they got a bump, and I wonder what your view on Procter is.
Yeah, it definitely got a bump. We had a caller on that as well, I think, just before earnings out here. And what it's trying to do, what it did was it fulfilled an A to B equals CD pattern, I believe. And it ran right into its TAS weekly profile out here. So let's see here if we get – so there's the 1-to-1, as well as running right into that resistance zone. So it's not a buy right now. If you were in it, I would not be suggesting to exit the trade. This could be a resistance area, the 87 range. It's got a swing point out here from October 10th. Daily chart we're looking at that had 15 million shares. You're kind of moving up with 22 million-ish shares from, you didn't actually hit it, but, you're moving up with good volume. If you were looking to buy this, though, the buy on it is going to be about 85.43 should it pull back on light volume, just really to come back to where it last broke out. Your buy on Procter & Gamble as we speak today is between 84.17 and 85.43 as long as it were to pull back on light volume. But at this stage here, I think 87.90 gets taken out, and Procter & Gamble runs all the way back to that October 10th level in the 90.33 area. That's just the way the chart is set up, but I don't see a good reward to risk trade at this stage.
Right. And on both of these charts look similar to you, or not really?
Well,
on a longer term. I guess, can both of them go to 100, or do you not see that same type of chart on them?
Sure. So in the case of Procter & Gamble, the question is going to be when it gets back to the 2014 highs, which is about 93.89, what is it going to do? And you'll know the answer to that as it passes, should it pass, the price level of about that 90.33 area. And if it can do it on a weekly basis with more than 63 million shares, then you might have game on for a nice move higher. Well above $100 would be the figure I'd be looking at. When we take a look at OMC, do both of these come from the same sector? I'm not familiar with it. Omnicom is a media, or what's Omnicom? I don't.
Omnicom does Proctor's advertising.
It does. Okay.
Omnicom competes with Facebook, but Omnicom is the old school.
Okay. Well, as far as the old school, I think it's probably performing better than Facebook in that it doesn't have any resistance once it clears. Should it be able to clear that 88.79 level? Yes, it needs to really take out 89.68, but there's not anything bad that. Hey, Robert, we got to go to a break. Hold on, if you would. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're on the line with Robert. Robert, were you able to hold?
I am, Steve. Thanks.
Great. Okay. Yeah, I should have done this during the breakout. I'm going to do it right now. I'm going to take just a moment here to do this. And what I'm doing is, because Robert had asked the question, it's a good question. I'm going to put a monthly time frame up here. Well, I was going to try to, of both taking a look at the difference between Omnicom and Procter & Gamble. So we've got Procter & Gamble's chart up on our screen. Let me go ahead and insert Omnicom, OMC. And again, we'll take a look at this on a monthly basis. And the question was, do they look similar? And so when I take a look at these two charts out here, here's where we've got really kind of one of the differences. So the top chart again is Procter & Gamble. And what happens is when you have these little swing point areas, which in the case of Procter & Gamble, we're looking at the week or the month of December 2014, when it began to sell off. Now, there are people that were holding that in the 93-ish area. This thing sold off all the way down to 65. It's natural for when price gets up there for people to say, I should have taken my money at 93. So if it ever gets back up here, that's what they might do. It's a natural hurdle. If, in fact, Procter & Gamble is able to take that high out and take it out with volume, you can see how it stalled here just a few months ago back in October, and then it sold off. The sell-off wasn't too bad, but the question is, what kind of resistance does it have still up in this level? Versus Omnicom really doesn't have any resistance historically on the left-hand side of its chart. All we can do is kind of go back to a couple of months ago or something. Well, that's not a big deal. In fact, everybody, no matter when they bought in on Omnicom, even if they added the highs, they're not thinking, geez, this thing pulled back and I just wish I could get my money back. You can kind of see what I'm saying, what I'm trying to communicate here?
Yeah, very much so. Yeah.
Because trading or investing is all psychological. And what technical analysis is doing is we're just trying to analyze the psychology of the marketplace. So you're dealing with the psychology of the marketplace. So what is this? What are these charts showing us? And then we have to think about what's the psychology of the investor. If we can nail those two things down, that's why we take a look at volume. When you are coming into an area that was that psychology of the investor because they were selling there, the one cure of that is the stampede for the doors to the upside out here. And then that's the cure for that. So that's where I say Omnicom right now, its chart looks better than Procter & Gamble.
What analysis. Great, Steve. Thank you very much.
Hey, you bet. Thanks so much for listening. Thanks so much for calling. Sorry that you had to hold. Let's go out to Rob in Denver. Rob, thanks for calling. Thanks for holding. How are you today?
Hey, great, Steve. Thanks to you. I want to compliment you for making. Boy, I can hear you at the other end. I'm sorry, but anyway, I want to compliment you for calling the top on January 6th, and then showing a reversal yesterday. You make it sound like it's so obvious, but I'll guarantee it's not. But anyway, I took your advice and I bought it. I looked at Adobe. It looked like it had a couple of handles. I bought some calls in it yesterday, and that's doing well. But how do you establish a target? Number one. Number two, I just got the office number, and I'm going to subscribe to your service. I just wondered, do you send that out by emails, and do you make any? Do you make stock recommendations in your emails, or what do you recommend? How do you recommend things?
Sure. So to answer your question with regard to how my newsletter service works, there's a newsletter that's sent out each day, typically by about 8 o'clock in the morning. Sometimes it's a little bit later, but typically by about 8 o'clock in the morning. And the analysis that you will get is what is the market communicating to us now since last night's close? What's going on in the equity futures market? What should you anticipate? Either to the bullish side or the bearish side out there. And it will cover the equity futures. It'll cover what's going on with regard to maybe a currency pair or two, depending on what's driving the markets. Also, what's going on with regard to gold, all of our trades, and there will be new added trades in the newsletter, whether they're for individual stocks or ETFs or long or short. I will provide subscribers with a list of either the 1x1, the 2x1, the 3x, the 3-time ETFs. So, and then newsletter subscribers, when they have individual questions with regard to a stock, such as Adobe, you got into it, you might send me an email and say, hey, can you help me identify levels of support, resistance, where it's headed, and things of that sort. So, would that work for you?
Great. I will call the office number as soon as I hang up, and
okay.
And
Perfect. So in Adobe's case out here, just like Robert and I were talking, Adobe doesn't have any resistance whatsoever. I mean, this thing, everybody in Adobe at this stage is in the money on a weekly basis. And that's a chart that I have up on my screen. It is now dealing with, it is taking out the high from the week of October 24th that had volume there of 9.6 million shares. Last week, it was taken out with 10.5. Whenever you get above a level of resistance with more volume, it's a beautiful thing, as Tom likes to say. It's only Tuesday, and you have 4.7 million shares. So this is clearly headed higher. If you're going to say, where is this headed to? The very first thing on a weekly basis, there is an A to B equals CD pattern, and I'll use the conservative one. And so it looks like Adobe right now is headed to the 118.74 area, maybe even 124.38. Now, that's a weekly chart that you and I are taking a look at. I'm going to switch over to my other charting system and just make sure that price is moving higher with energy. And the answer is it is. Let me switch over to a daily chart just for the heck of it, see if there's anything out here that stands out. And the answer is there's nothing that I see out here that suggests that A to B equals CD pattern at this stage will not unfold.
Okay, great.
Does that help? The other thing that I could do out here, the other thing I would do is just take a look at the expansion of its last set of swing points. That would be the October 24th high on a daily basis and the low from December. The low from December 2nd. So you may get a little bit of resistance at 114.65. Maybe it's moving up with nice volume, and this has more likely than not the 119.18 area should be where it's targeting.
Fine. One further question. You don't mind me asking, what is your monthly charge? Are you allowed to say?
I believe it's 149. But then if you have Tiger dollars, you bought those at discounts and things of that sort. So, and then there's a monthly charge. There's an annual fee that's discounted. And Leanna in the office can give you all that information.
Great. Okay. Thank you, Steve. Appreciate that. Thank you very much.
You bet. Thanks for calling. That was Rob in Denver. And what Rob was referring to, if you didn't catch last night's segment that I did on Tom's show, and we had a problem with our data stuff, not our data stuff, but our Hotcom, where TigerTV could see what was going on, but inside the den, I don't think that they could, or something along those lines. What he was referring to is this. Let me put this up on the screen out here. So here's one of the things that we know. Slideshow from the current slide. Okay, so here's one of the things that we know, and we'll have to do this when we get back from the break. But January 6th, so 2 weeks ago when I was doing Tom's show, as the market was moving higher into January 6th, we said, well, hold on a minute here. The annual seasonal cycle for the Dow says it was supposed to top that day, which it did. We come back, this says it's not supposed to bottom till January 30th, but we may have found a different bottom. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed of TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So we're taking a look at really cycle-type charts out here. Everything has cycles, right? You know, the sun comes up, the sun goes down. You know, there's a cycle there. There's a lunch cycle, a dinner cycle, snack cycles, bicycles. No, there's, but there, you know, there are cycles everywhere. The tides, right? There's cycles everywhere. We have to believe that the stock market has cycles as well. And so we want to understand what they are. In this case here, all the data that I'm looking at, so we have 85 years worth of data points, is looking at the Dow. Now, what we also know that we have, so you've got an annual cycle out there. Very important cycle. Dominant cycle, has been a dominant cycle, will until it fails. This is last year. They're sometimes off by a few days, maybe 10 trading sessions, a couple of weeks max, something like that. We're always looking for patterns to complete around these cycle dates out here. And, of course, so this says around the January 30th timeframe. We're the 24th, right? That can work with regard to a cycle low. Now, what we have right now is supposedly we have a Republican president, right? He's certainly from the Republican Party out here. And there's only been 4 times in the last 32 or last 85 years out here where we've seen it go from a Democratic president to a Republican. We've gone from Dem to Dem, the Republican. I'm just looking for those instances when we had a change in party and the head guy in the office, head gal in the office. At this time, it's always been head guys at the office. And they all said that the Dow would top on January 6th as well. That's why it was so easy to say to Rob, hey, let's not focus on the 20,000 mark out here. Let's focus on the cycle that is in play. Now, in this case here, only 4 instances, but, you know, says that the Dow ought to head down anywhere into the time period of December 12th to December 25th out there. But 4 instances is not a lot. We have a lot more instances if we just simply take a look at the first term of a new president, regardless of the party out here. And this was what I showed yesterday, I was trying to show yesterday, which said, guess what? The Dow could be forming its bottom yesterday, January 23rd, as the market was moving lower. That is what the average, that is the cycle. It's not like a question whether it's a cycle or not. That is the cycle with regard to the Dow, which would then say the market or the Dow could easily go up into February 10th until this fails out here, because it really correlates to the end of the end of January type cycle. And we've seen this change in trend, right, with regard to the ascending price channel out there. Everything's actually fitting together. It's like putting the pieces together for a Rubik's Cube. So that is what Rob was mentioning with regard to yesterday. Now, in the newsletter, we were short yesterday. And this morning, when we saw those levels fail, that were reasons to get us to the short side, we immediately cut. We said, nope, adios, sayonara. We don't want to be on that side of the trade out here. Now, this chart here that we're taking a look at, this was requested by Danny in Atlanta, who wanted to take a look at the Japanese yen. This is the currency pair out here versus the U.S. dollar versus the ES mini. I don't really have much to add to this. Sometimes it correlates, sometimes it doesn't. Sometimes you feel like a nut, sometimes you don't. And then you just go ahead and get, instead of an almond joy, you just get a Mounds bar out there, right? But in this case here, it's really the Japanese yen with regard to gold that we really want to go ahead and pay attention to. I think I was mentioning before we went to the caller, I know I was, because I saw some comments posted here with regard to the VIX index, and so in essence, that's what I was taking a look at before we went to Rob. I didn't realize sometimes the calls come in and I don't see the signal inside. That's my fault out here, but we were taking a look at this, and there was mention about the skew index and what options traders are taking a look at. It's actually this chart right here. And that comment is right on. It is dead on. I mean, it is just simply dead on accurate here. Now, what I like to take a look at is I'd like to take a look at the spot VIX, right, the VIX index, versus all of its forward-looking futures contracts out here. And in this case here, we go all the way out to September 2017. Now, what I like to look for, signals at the top. What I like to look for is where this gets out of skew, so to speak, a whole different thing than the skew index, but totally gets out of whack out here. And you start to see the difference between the spot VIX index and the forward futures contract somewhere above 70%. I like to see 80% out here, but anywhere above 70% is a signal, not that day, but it's a signal of an impending top that's trying to form. We're still here. We have to see these markets really crack through some, like the 2277 level inside the ES mini, a couple of other things out here. But we did get another signal back out here on the trading day of January the 13th. That's the very bottom portion of my screen. We had an earlier signal back here on December 21st, but that was taking a look at the July futures contract. And when the market topped, just so you know, when the market topped back in 2016, we got one of those signals back on August 9th. The actual top came in on August 23rd out here. So you know, there's always going to be bullish and bearish signals that tend to form out here. It's just a matter of being able to sift through everything and have some identified patterns to pay attention to. So as I said when we first began the show, just like yesterday, the key is going to be this chart right here and its pullback. Should we get a pullback, we will get some type of pullback. There's always a retracement in play, and so it's going to be, I'm saying it's about the Dow out here, which, by the way, it's on to its 19,884 level. Of course, it could be just a simple breakout. And that could really be underway, right? That could be underway, and that we will know if, in fact, because right now you've got the ES mini trading above 2277, right? 22 ounce trading right at 2277. You know, when Robert and I, both of us, we took a look at like Adobe, we took a look at OMC. Omni-channel out here, you know, and if you take a look at the NQ, it's got no resistance. There is no resistance inside of the NQ, which can easily pull the markets higher out here. Easily. Done deal. There is nothing on the left-hand side of his chart. There's not a hidden horizontal level of, well, I can't say there's not anything. That would be disingenuous, right? I'd have to actually pull up our horizontal trading ranges to see if there is something out here. But with regard to price, swing points, things of that sort on the left-hand side, there's not anything there. Being powered by solar, there's no question about it. But solar power is pretty good to go ahead and motor these markets to the upside. If we go if we go take a look at, which we can, if we take a look at the daily indices, I'm interested to see what the NDX 100 is doing, what the NASDAQ Composite, really what all the indices are signaling to us. But here's the NASDAQ Composite. Let's put this up on our screen. And so if there's anything to be concerned with, it is that it is in potentially wave number 7. I say potentially because, quite frankly, these seventh waves have just failed miserably. They've held for a couple of days or so. There's a 1-to-1 A to B equals CD in the NASDAQ Composite at 5607 that is targeting. You're at 5598 right now. So there's the potential for some type of topping signal out here. But you need to close. It would need to close back below 55.79 in order for that to occur. But yes, do that. It is in this last leg here in the Kiev G is where it's at right now. Now, remember, that can go on for days and weeks, right? As long as it continues to make higher highs, that pattern just extends itself. Inside the NDX 100, if we take a look at it, it broke through its key of G. And those of you that are experts in the key of G, you know that means this sucker has recycled. It's strong. It's long. It's long and strong. Steve Rhodes with TFNN. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So, the other piece of evidence that we looked at yesterday, so with regard to when I did the segment with Tom out there, in recognizing that, maybe we take a look at the Trump presidency here is not so much just like a total Republican candidate out there. This is Stevieism out here. Maybe you feel the same way. Of course, we know that there's a whole lot of others that feel the exact opposite. I'm coming to you from the standpoint of analyzing the stock chart, right? This is trying to utilize pieces of information out there, historical information, and just trying to logically look at putting these pieces together, these pieces of the pie. So when the Dow was moving lower, when I said, that January 23rd is a bottom for all first-term, the combination of all first-term presidents out here, regardless of, party out there. And then we looked at how the Dow in this retracement, this little pullback, this little sideways move that is been taking place here for quite a while, has been able to find support at Stevie's blue line, the blue line being the daily horizontal trading range level of support out here. And it's held. We formed a hammer candle, which always signals you're trying to form a bottom. That was back on January 18th, right at that low. And this suggests not only is the Dow going to go make that 20,000 number, this would suggest that the Dow is going to head to 2191. And that really becomes, that's the weekly, by the way. So 2191 to 20,314. This doesn't say it's going to be a straight up move necessarily. But if we do take out the most recent highs out here from January 6th, then it says that it's free, right? It's cleared all kinds of resistance. Not like there's a lot of resistance out here inside of the Dow. Clear the resistance to go ahead and head up into that 2191-ish type area, which then would say, okay, now, if that, in fact, is how things play out, and I think to say that it can't or won't, I'm not going to say that. Instead, what I would say is that from the current slide out here, that what the market ought to do is actually move higher for the next couple of weeks, ought to move higher into February 10th before we see any kind of retracement out here. But what I do want you to notice, the cycle pattern associated with the first-term presidents, regardless of party, is that yesterday would be the low for the year. Now, I don't have the full year out here, but and you don't have to trust me, but what I'm suggesting to you is if this is the pattern that's in play, here's what you should anticipate. Fumes, solar power, whatever it is. Like just simply gobs of liquidity. How about gobs of liquidity out there? And speaking of gobs of liquidity, let's just go take a look at the advanced decline line. Open file. Let's see if I can pull that out here. That the market ought to head higher into that February 9th-ish type time frame out here. There we go. NYSE, where is it? Advanced decline. Let me go ahead and put it. Because we are either at or very close to all-time highs out here. And, that advanced decline line right now, my reading is a new all-time high on it, 388.202. Disregard the actual number. But, so you've got so when we say gobs of liquidity, I'm not just talking about gobs. I'm talking about gigantic gobs of liquidity are in the market, and that's what's really chasing things higher. We can call them short squeezes, whatever we want. Just simply, and it's a technical term, just simply gobs of liquidity that are out here. In fact, if the NYSE takes out its high, I believe that's also taking out a seventh wave move out there. And for those of us that are aficionados and singing in the key of G, which we all are, we know that just says the market's recycled and is moving topside. So, folks, stay tuned. Your favorite polar bear in mind, David White, is up next. And then Tuesday, we've got Tom O'Brien, 3 to 5, Andy Heck from 5 to 6. I'll see you back here on Wonderful Wednesday. Have a great afternoon, great morning, great evening, depending on when you're listening to the archive. And take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.